Welcome to Bloomberg again, Bernard Hodler, the CEO. Good to have you with me. It looks as if it's been a good first half to the year. How would you describe these first 6 months of the year?
Thank you, Manus. It was a very good half year for Julius Baer. I'm actually very proud to present these numbers and the results for the first half year. Today, we reached 480 million net profit, which is actually a record for Julius Baer in the 128 years of history. So very satisfied with that. We also produced almost 10 billion of net new money, which I think is a very good number. And I'm very proud that we added a net almost 80 relationship managers to the platform in the first half year.
Now, when we spoke in January, you said, I'll set that target, 80 new managers for the year. You're at that level. Are you going to upgrade that number? Do we expect you to continue hiring? And if so, to what number?
Yeah, actually, we also had the acquisition of Reliance that added 13. So the net number is actually 66. But I'm very confident that we reach or even exceed the 80. So we have no plans to completely slow down. And you could expect that we will reach or exceed it.
Can I ask you where are you finding these bankers? Which is the geography that's giving you the best yield?
It's actually 3 geographies this year. It's Asia, it's the Middle East, and it's Europe. The main reason they are attracted by our platform is the business model. As you know, we do just private banking, wealth management, and it's just a model that the private bankers, the front people like, because they don't have to push our own products only.
Net new money came in at 5%. This time last year, that was 6.1%.
Yeah.
You're in the corridor.
Yeah.
Now, are you going to make the higher end of the guidance this year?
We'll be within the 4 to 6% this year. That's my guidance, and it was my guidance also in January. And I think in January I said 2017 was an extraordinary year. Markets went one way, everything was a bit easier. I'm very happy with the 5.1, and I can confirm that I feel comfortable to land within the 4 to 6%.
Now, there's a different presence as you come into this room than when you came in here 6 months ago. What's been the biggest challenge in these first 6 months?
The markets were not so easy. As you know, volatility has come back. It's also good for Julius Baer because we have more interactions with our clients. And to be very honest, I feel very comfortable in my seat. Good.
Let's get to some of the targets. This time last year, Asia yielded perhaps the best inflows ever. How is Asia holding up given the China market meltdown that we've seen on the equity side of the business? How's Asia flow holding up?
Asia is actually holding up very nicely. We have now a quarter of our assets that we manage in Asia. That's about 100 billion. We have seen a bit of deleveraging in Asia in some areas, mainly in the fixed income area. So clients that were invested in fixed income and leveraged it with loans were a bit more cautious. And generally, the tone I hear from the clients is a bit more cautious because they also look at the geopolitical situation and the trade tensions. But overall, it's holding up quite nicely.
Do you still want to hold on to that vestige? You've been left a few chattels by Boris Collardi. One of them was a target to make Asia 30% of the business by over a 5-year period of time. Do you still stick to that target? 30% and more of Asia will be the Julius Baer business?
Currently, it's about 25%, and of course, it depends how nicely we grow in other areas. But definitely, it's one of our most promising growth areas that we have, and we continue to invest into Asia. Maybe you've seen the transaction we did in March, where we did quite an interesting joint venture in Thailand with the #1 bank, Siam Commercial Bank there. So we see other opportunities, not only China. China certainly is an opportunity, but there are other markets that are interesting as well.
In terms of defections, we wrote a story, some bankers leaving the Bahamas and Panama. I'm just wondering about retention. Are there any pockets where it's getting harder to retain? Are you seeing Collardi take any of your bankers away from the system in the near term?
The answer is no. Of course, we respect Pictet, but we have lots of other competitors as well. And what you mentioned with LATAM, it really has to do with our strategic repositioning. Maybe remember in January I also talked about focusing on the key markets.
Yes.
Now the key markets for us in LATAM are Brazil, Mexico and Argentina. So we have also we made sure that we invest into these markets and do a little bit less in the other markets.
And if you had to choose a geography that fits best with the next acquisition, we saw some Latin America, you've done a little bit of Asia, but where are you drawn to for the next serious growth spurt?
I would say we continue to look into opportunities in the growth markets. That's again Asia and LATAM. But I'm personally quite sure that over the next 12 to 24 months, we'll also acquisition opportunities in Europe and even in Switzerland.
Within Switzerland, so bolt-on acquisitions or size?
Look, the last 2-3 years, obviously, everybody was doing well. Everybody was a buyer. Prices were quite high. And when the markets get a bit more difficult, and that's my expectation over the next 2-3 years, we'll see more opportunities because maybe some of the competitors will realize, it's quite tough out there.
So let's talk about the consequence of that, because I was looking at your core equity tier one, your capital, your buffers of capital, 13.7%. So question one, you're going to reward the shareholders. Is there a prospect of a buyback or a higher dividend, first of all?
There is. It has, again, a lot to do with what opportunities do we have on the M&A side. With 13.7 now, and hopefully we continue at the same pace, to generate free cash flow, there is a good possibility that we would return some of the capital to the shareholders. But if we see good opportunity in M&A, we'd use that for
you can't whet my appetite like that. You've got to tie it down a little bit. Can the shareholder expect a share buyback 2018?
You can expect a share buyback or a return of part of the capital to the shareholder if there is no larger acquisition.
Okay. You've talked about the markets. It's a very frank discussion about markets. We caught up with Larry Fink a couple of weeks ago. And he said, if trade wars go, I've called it the full Monty, $500 billion, you could see quoted markets come down by 10 to 15%. Do you think you could see that kind of a move on equity markets if Trump goes the full Monty?
Look, of course, we'll see volatility in the next 6 months, but also in the next 2 years. Right now, we don't have a trade war. Huh? We have trade tension, trade discussions, and everybody's positioning. Of course, now what we heard from G20 in Argentina over the weekend is not very helpful. And if it goes to the full Monty, as you mentioned, the 500, it will be bad for the markets. We don't expect to escalate that the situation will fully escalate like this.
So you think it'll step back?
We think that the discussion will continue for many months. Mm-hmm. We think that some of the trade partners of the US will also adjust some of their parameters, like China and Europe. But we don't expect that things will go completely out of control.
Can I ask you, as we're 20 days into July, so it's always hard to read, but those 20 days compressed a great deal of rhetoric and volatility. Has there been any shift from the clients, any more taking of cash, any more taking of treasuries or bonds, any move at all from the client side?
In July, or you mean over the whole year?
Over this past sort of 2-3 months, at the tail end of Q2 and into this month, any shift in the dial?
I mean, not massively, Manos, I have to tell you. We have seen these, the clients that were positioned in the fixed income market and leveraged it, that they corrected their position a bit. We have seen a bit more diversification of clients, but by and large, they're still invested. And if you see the numbers that we published today, the distribution of the client assets in equities and fixed income and cash is very similar. It has not moved massively.
I will close with this. The producer will have a heart attack, but I'll squeeze it in. Britain will thrive even if there is no Brexit deal. That's according to David Davis in the Telegraph this morning. You were quite contrarian when I met you last, and you were quite bullish on the UK. When you read headlines like that, do you agree Britain will thrive if there is no Brexit deal?
We follow it very closely. I mean, we have invested in the UK. We'll continue to invest in the UK because we think it's a very interesting wealth market. It's actually the 5th largest wealth market in the world.
Yep.
And for our business model, I'm quite optimistic and confident that it will be positive.